The American IPO market is growing and it offers great opportunity for investors who know how to take advantage of it. You'll find out how to do just that in today's episode of Smart Investing Stock Breakthroughs. Hello everyone, I'm your host Sandy Franks. Let me introduce you to Ann Sosnowski, editor of Diligent Investor and Diligent Investor Microcap Hot Sheet. Ann has been watching the IPO market and has seen very impressive numbers coming from this sector of the market. Ann, welcome to the show.
Thank you, Sandy.
Now, Ann, just how big of an opportunity is this for investors?
Well, Sandy, the IPO market is already on track to be the most profitable since the year 2000. Now, IPO offerings in the United States have already raised about $15 billion this year through roughly 80 deals, which is up a whopping 17% from this time a year ago. Now, we're seeing increased IPO activity affecting the markets absolutely positively. The Dow Jones Industrial Average continues on its bullish streak, hitting new highs. You have optimistic investors are pumping more money into the markets, partly because of the increased interest in IPOs.
So, Ann, exactly how many IPOs to the market are we talking about here?
Well, Sandy, there were about 18 IPOs that debuted in March 2007, which is about twice as many as a year before, and they raised about $2.9 billion. Now, for the first quarter of 2007, 48 total companies went public. IPOs have hit their highest dollar level since the tech craze peaked 7 years ago.
Which makes me wonder why the sudden interest in IPOs. As you just said, we haven't seen these kind of numbers since the tech craze in 2000. And of course, that round of IPO cost investors a lot of money. So what's happening? Why the sudden interest in IPOs?
Well, 2006's 181 initial public offerings totaled about $40.6 billion, which is 22% more than what they made in 2003. Now, just like the M&A boom, that's taking over Wall Street this year. IPOs should increase in 2007 over 2006. To answer your question, the most exciting part of the IPO market right now, compared to the tech.com boom, is that these companies are extremely profitable. They're not just shell companies that appear on the market with a hip name and never get every investor to buy into them. 72% of the companies going public in 2006 were profitable. Now that means that this year, the whole batch of IPO companies could be 100% profitable, gaining on their own successful merit, which is great for individual investors.
So in essence, what you're saying is that this round of IPOs isn't anything like the IPO tech craze we had several years ago. These are real businesses with real business plans and real ways of making money.
Absolutely, they are. Now, playing the IPO market can be tricky and risky, as some investors saw in 2000. Some IPOs actually do lose money. If you invested, for example, in Vonage Holdings, you'd be down about 82% right now since their IPO. And if you bought Restore Medical's IPO, you'd be down about 65%, which is not a successful way to play IPOs at all. Then again, you have really great IPOs. You have to be really selective. For example, investors who bought FS Stone Group, which is a commodity risk management service firm, has returned about 100% since IPOing. Another company, JA Solar Holdings, a big alternative energy company and Chinese solar cell producer, has seen about 80.2% gains since February, when it IPO'd at about $15 per share. And you also have one of the other heavy hitter IPOs is Fortress Investment Group, which is a firm that manages private equity funds and hedge funds, and that's been up as high as 64% since February at its IPO price of $18.50.
Okay, these sound good gains there, but going forward, how does an investor make money in IPOs? What do you recommend they look for?
Well, while investing in individual IPOs can be profitable, sometimes individual IPO stocks can go sour, just like Vonage, or they could even take a long time to produce real gains for investors, which is why it's extremely important that you find a specific way to invest in the overall trend of IPOs without worrying whether company A will turn a profit or company B will repay their debt. You have to find a really safe way to play the increase in IPO offerings, not in the individual stocks. That way, you're hedged against risk while also being able to safely ride the IPO market trend. Now, my Diligent Investor subscribers are no strangers to powerful IPO stocks. We're up about 136% on MasterCard in 5 months since buying its IPO. And in March, we also bought another alternative energy company that recently IPO'd that's already up 34% in our portfolio. We're about to do it again 3 times over, which is why I'm so excited to offer this opportunity to the viewers.
Well, I mean, if you can do it again, that's great. So obviously you have some kind of secret. And my question then is, what are you doing differently than anyone else who's trying to capture a piece of the IPO market?
Well, I'm recommending what I call the secret IPO registry. Instead of scouring the market to find the one IPO stock that you think could make it really big and pump up your portfolio, you simply invest in this simple registry. Now, it is the best way that I know to invest in the IPO trend because instead of betting on individual stocks, the registry takes advantage of the momentum of the IPO market itself, which we've already seen is booming.
Now, Ann, is there a particular formula or a system that you've developed that allows you to narrow in on the IPOs that make up this registry?
Yes, Sandy. There's for any individual investor, there's 4 aspects of a stock, of an IPO stock, that you want to look for. Now, the first one is company fundamentals. These can be found on any Yahoo page of any stock. You're looking at the financial track record of a company, of how their earnings are growing, their business model, what their profits are coming out every quarter. These are essentially important to making sure that a company is profitable and that an IPO stock is well worth investing in. Now, the second thing you want to look at is corporate governance. This is the board of the directors, the president, CEO of the company. You want to make sure that they're running the company correctly, that they're maybe reinvesting that money that they make from earnings into the company to make it grow. The third thing that you always want to look for in IPO stocks is relative valuation. These are your dry numbers like price to sales, price to equity, PE ratios, value to cash flow, cash to debt, all of those things that you can also find on Yahoo Finance and in the financial statements of these companies. The fourth aspect that you want to look at is very chart driven. You want to kind of watch an IPO stock after it goes public and see how it is trading relative to its other competitors, to its peer group in its industry. These 4 things are exceptionally important when you're looking at individual IPO stocks to invest in. Now, the secret IPO registry that I've created is a very simple way, without you having to look at these things, that you can invest in the momentum of the IPO boom.
Gotcha.
As long as the numbers of all these companies in the secret IPO registry are profitable and they're making money, which they are, you could turn a basic $5,000 investment into $31,000 by 2011.
Now, Ann, that's quite a claim, and I'm not saying I don't believe you, but I'm a skeptic, and I think that probably our viewers are too, and I think they're going to want to take you up on that challenge. So where could they get more information about the registry that you put together?
Oh, I would love for viewers to take me up on this IPO registry. I really believe strongly in it, especially with the IPO market. In fact, I'm offering a report that's entitled 3 Easy Doubles. This report details the 3 best IPO investments of 2007, and all could make you at least 100% gains by the end of 2009. Now, these companies reach across all industries. Their recent IPOs, one is an alternative energy company, one is a cosmetics company, and another is a food company. But let me add that my research on the IPO trend was designed primarily for safety. Diligent Investor is a newsletter that focuses on the safest ways to make investments. Some of you may want to invest in IPOs, but you don't want to take on the risk. The secret IPO registry lowers that risk to a bare minimum, and it allows you to capitalize on this growing IPO industry and not the individual stocks. Then with my 3 quick double stocks, you can decide how much you want to put into those stocks, or even if you want to, because you're already profiting off of the IPO trend with the secret IPO registry.
Gotcha, makes sense. It sounds like you've sort of made it a little bit easier for readers to get a piece of the IPO market.
Absolutely.
And also reduce the risk. It sounds like it's something that that viewers should take a look into your registry. So if you have this report that you mentioned available, where could they get it and when is it available?
Well, it's available right now at diligentinvestor.net. For a simple $49, you can sign up for the subscription and you get it for free.
Well, it sounds like good information, Ann. Thank you for being on our show today.
Thank you, Sandy.
As Ann says, if you'd like more information on her IPO registry, you'll find that available at taipanfinancialnews.com. I'm Sandy Franks. Thank you for watching, and I'll see you again next week. Until then, here's to great profits from smart investing.